Hey guys, welcome. It's Mark Coe from commoditiesguy.com. Here it's September the 9th, 2015. I want to go over a euro analysis from last night's newsletter. Euro we had as a buy on dips. So I just want to show you the newsletter I'm referencing here. This was the analysis coming into the evening. Euro dollar rallied as expected, but is closing just short of this resistance at 12.10 to 12.30. Our bias on the day is to buy dips to 11.55 to 11.40. So that 15 tick zone, stops are going to be working below 11.20, and then again I have our 3 support levels and 3 resistance levels. So I just want to show you how euro played out today, Wednesday the 9th of September. It actually played quite beautifully. So again, the analysis comes out early evening U.S. time, about 6 in the evening, so right around this point I'm referencing on the screen. This is just around 6 o'clock Eastern on Tuesday night. So what we have here is we have resistance level number 1. Resistance level number 2 was never challenged. Resistance 2 is up above 1270. So all we really have is support 1 comes in at 1160. Support 2 comes in at 1120. So let's focus on the buy area. This is where we're buying dips in euro dollar. So again, we're buying dips from 11.55 to 11.40. So it's a 15-point zone. Not dealing on any one tick, but this is what starts the buying, 11.55. And essentially the way I deal is I will build into a position as it moves further into the zone. So if it were to literally trade directly to 11.55 and bounce, I would end up with the smallest position. If it trades down to the bottom edge of my zone, I get a bigger position. So let's think about how the day plays out. Euro starts out, as I referenced, we were trading right shy of this 12.10 resistance where you see right here. That's how euro closed on Tuesday afternoon. Managed one quick little 15-minute close above it and then right back below. And that was kind of it for euro early in the Asian session. So it's Europe that starts to get exciting, which takes us down to our buy level. You see we do a little work right around support number 1 at 1160, but again we're not interested in dealing right on our support. We've identified a key buy zone that we want to be dealing, which is 1155 to 1140, and you'll see the reaction. Right into 1155 you get a reaction higher, not much, but it takes you above support number 1. You come down and retest it again, and this is all of a sudden the move you're starting to look for. So one of the things that's key in this analysis is what is the reaction to your buys or to your sells. And I just want to point out a couple things in the way we trade that I think you could find interesting. Looking at the breakdown from euro, and you can find a really nice spot here from the breakdown in like I said, in early Asia. This is what took price lower. So in pulling that level across, what do we find? And this is what I always talk about to my students here. Levels have memory. Why is this trading back to the exact same spot it broke down? This means there were sellers here at just under the 1200 figure, so at about 1190. So if sellers were able to drive it from 1190 down to 1145, don't you think I want to take a look at that same level again? And what do we get when it approaches that level again? You get a quick little removal of liquidity or a stop run, whatever you want to call it, that takes it through 112 the figure, but unable to close. Now the next test, literally to the tick from that breakdown zone. So you know that's a decent zone to be dealing on. You know it's a decent zone to take profits because price is showing you buyers are no longer willing to take price higher at this level. Alright, so now we're going to come back and visit bottom side again. Here's where we get challenged. We're right back into our buy zone, and this is where I'm taking my longs, 1155 to 1140. So what I said earlier is I'm going to end up with my biggest position sizing at the bottom. My stop level's 1120, so I never really get seriously challenged on the stop. And we break the bottom edge of the buy zone by a few ticks. We trade down to 1132. So we break by 8 ticks, we break the bottom of the buy zone. But what happens at that level? You start to get engulfing candles, nothing but positive action. All of a sudden, we're right back into this value area that we've spent the majority of European trading. Now one more test right back into the buy zone, and look at the difference of price action at this test versus here. So the sellers were able to maintain some control here and actually drive price down to 1132. Never endangering the stops. Stops were still 12 ticks away. But on this attempt, you see price never rotates back up to this level, this 1190 level, but price also is not able to come back and test the lows. So here's where it looks like a really solid long. The test back into the buy zone holds. Test back into the buy zone holds. What do you start to get? You start to get engulfing candles, lots of positive action. Now here's where you know you got them. Price is then able to take out the last little resistance level, the last swing high, and now we're back to the races. And now taking this level further across, let's see this level in real time. What's going on late US afternoon? So we already know this was a key level from the morning, but what happens in that late US afternoon? It doesn't stall. It doesn't do one of these long empty wicks. It literally trades through it on a very powerful candle. Spends about 45 minutes consolidating right around there, and then serves as what? An acceleration point for the next 45, 50 ticks higher. But we closed the day just above 112 the figure. So all in all, it worked out to be about a 60-point winning trade. If you dealt on it twice, you could get more, but if you were once, one trade and hold, that's what you ended up with, about 60 ticks on the day. So again, it's all about framing your day and reaction to the levels. So I'd really encourage you to check it out. The newsletter comes out twice a day. FX markets come out at night, and commodity markets, US markets, are sent out early in the morning. So commoditiesguy.com, free 2-week trial. Thereafter, it's $29 a month, and love to have you guys check it out. Love some feedback. But this is what we're doing on a daily basis. We're identifying the levels, and you see we're identifying the levels at 6 o'clock at night. You see when they come into play, 2 o'clock in the morning, 4 o'clock in the morning, 8 o'clock in the morning. So you have these levels on your screen all day. This is what your screen looks like. Support, support, buy zone, stop, resistance. You only mark this level during the day. It's dynamic. You're marking it as you're doing your work, and we'll talk more about that in future videos. But this is what this is what your screen would look like with this analysis. Support, support, stop level, buy zone, resistance level, and you're good to go. So anyway, again, Mark Coe with commoditiesguy.com. Check us out. Twitter, it's Mark Coe Trader, and feel free to send me a message if you guys have any questions, if there are any specific markets you want to take a look at. And I hope you guys are trading well. It's a good start to September, and hope to keep the momentum rolling. Thanks, guys.